Good morning. It's Dan Gutierrez, L&G Mortgagebanc. I've got some commentary for you today on what in the world are mortgage rates doing. Should you lock? Should you float? Are we bullish? Are we bearish? Let's break it down in just a minute or two and find out what we should do. So what's going on right now? We've got a really interesting trading pattern for folks. We've been in this narrow trading pattern within the last probably 6 trading days, and what we've got today is some real good support here indicated on these green lines, and we've got some really strong resistance here. Now, one thing's going to happen for sure. We're either going to break above this ceiling of resistance and mortgage rates will get better as the value of bonds increase, or we will fall below this support level and do some free falling really until we really stop somewhere, potentially even at the 100-day moving average, and that could be some real loss in value, which would cause mortgage rates to go up. But I'm not thinking that they will, because there's too many things going on in the economy that give us a real bullish outlook on mortgage-backed securities. So take a look at this technical pattern. We have formed this arrow pattern here. Here's the tip of the arrow as the trading range has narrowed. And then here's the bottom of that shaft where we have support, and here's the top of that shaft where we have resistance. Now notice how we're just ping-ponging inside this trading range, but something very interesting occurring today. Look at this pattern. Yesterday's candle, we actually went all the way down and tested the bottom of this support, bounced all the way back, and closed at the very top of that narrow trading range. Then today, opening up right at the top of that trading range where we closed yesterday. Now that's a very, very bullish signal for mortgage bonds, meaning that we're probably set for a move up, which means rates could come down. Now, this market's volatile still. We could fall below, but I'm not thinking we will, because there's too many indicators showing that we still have a very bearish outlook on the economy, which is good for mortgage rates. Taking a look at inflation, which is the arch enemy of long-term debt or long-term securities, look at this area in here. This gray area here indicates the recession that technically we're kind of coming out of, although some disagree, think that gray area should be extended to where we are presently. Now, this particular chart on the consumer price index, which measures inflation, really should have us down in this area for September, which puts us, folks, at 0 inflation. That's right. We've got no inflation in the economy. Now, looking back into August, kind of a real narrow area time frame here where we're in a technical recession. Same kind of pattern here, but we only dipped down to 1% inflation, and today we've got 0 inflation. That is really good and bullish for mortgage bonds. So taking a look at what's going on in the economy today, for rates to go up and for rates to go down, we've got corporate earnings. Those already coming in, probably affecting mortgage bonds a little adversely. We're down about 15 basis points right now at about 1140 here on Friday, the 17th. Some of the biggies coming in like Samsung. My belief is that the numbers for their new product, the BlackBerry Slide, is doing pretty well. Boy, I wish I had one of those. That's really the only thing coming in the economy that's strong for the economy. The rest is not good at all. Consumer price index, inflation very, very low. That's good for bonds, mortgage-backed securities. And then we've got some things going on in Europe. We've got Ireland potentially needing to reach out for financial support abroad. Kind of a dismal economy that they're in right now. So going into the weekend, I am bullish for rates to go down or at least remain where they are, and thinking that the economy is still very, very, very bearish, still in the tank. So that's my commentary for Friday, September 17th. If you have any questions, give me a phone call. 463-5101 is my direct line. If you have any questions about mortgage products, let me know as well. My company is offering a streamlined refinance, FHA to FHA refi loan with no appraisal, no credit check, no minimum credit requirement, and no income verification. A true FHA streamlined refi, one of the very few companies I think that's offering this product. So let me know. Rates are low. call me, 463-5101. Hope everyone has a fantastic weekend. Go out to the state fair and eat lots and lots and lots of fried bread and turkey legs and food at the Spanish Village. Take care, folks. Talk to you soon.